because we've been talking about insurance for 4 or 5 years. And last year, in June of last year, they had emergency session to deal with the rise in cost of insurance and how premiums are going up 20% every renewal. And with what happened in Southern California and the hurricanes that happened, last year, there's kind of no end in sight to is insurance going to play a major role in whether somebody can afford it? Because then you're having to choose between dropping your coverages and self-insuring, to a higher extent than you would have otherwise. So that's another factor in owning a home or owning a secondary home or a rental property that can you weather that?
The thing that bothers me out of California is like, even if you were self-insuring, right? And I think a lot of people were effectively.
Yeah, because the cost of the insurance had gone up so much.
But you had you're in an area where I've looked at a bunch of the flyovers of some of these areas, right? You had houses that were nice houses, not Beverly Hills mansions, right? 3,000 square foot craftsman, kind of style houses.
They were in older communities where the surrounding area built up around them. I mean, some of these communities were, 30s, 40s.
But I'm saying, you're personally insuring the theoretical replacement cost or damage to your home, right? So your worst case is like, okay, I got to rebuild what's here. And all that to say, their dirt value incredibly expensive, right? In a lot of these areas. And we sit here too with a lot of areas, like the coastal areas, like just a prime piece of property. The challenge that nobody accounted for that was personally, insuring themselves out there was your entire town being gone. How much now is your dirt worth when the whole reason you were drawn here is disappeared? Your services are gone. All the whole community and stuff is just decimated.
Yeah.
Like that's real market value out the window, not just replacement cost of your structure. Those are two very different things.